So, hello, and a massive hello to everybody. Hope everybody's having a great time wherever you are, whatever you may be doing. This is 50 pips, rocking and rolling, 9th of September 2018. No trade calls, recommendations, or response for their own stuff. What's going on? Should be an interesting week. We've got a lot of data on deck, but most importantly, the BOE and the ECB on Thursday. Apart from that, the theme remains the same as far as we're concerned. The market being extremely complacent in general, but especially things seem to be building up here on China front, on the tariff front. But things are heating up in Washington, to Middle East, etc., etc. You name it. As far as we're concerned, is even if the situation is it may be a trickier read on the SPX. We'll look at the on the ES in a second. Our base case is still that tech has broken, right, and that we have to get a decent correction. Now, it's not easy, and these things are never really linear, but that's our base case. So here, going into the week, we've got the Nasdaq's attempted to break out, false breakdown, and we have to see if it continues to correct or if it's going to stay in trend. So, I mean, here the bulls are going to look at it in terms of this is another awesome buying opportunity, just a little pullback back into the 50 for move back to new highs. Should we move lower? They're going to say it's even cheaper for a move back. Should we move lower? It's an even better bargain, right? If you like them here, you really like them here, you really, really like them here, and you love them here. So it's still holding in trend. The way we're looking at this is because this is a false break of these highs, and this is happening at a time where a lot of names are breaking in an ugly fashion. We think this has the potential, especially if we continue to get negative news flow, if we're going to get China retaliating, etc. This has the potential to catch a lot of people off guard. So as far as we're concerned, the first real break was on Netflix. Remember? We're short here, then we got the gap down. This is essentially holding very, very heavy. It tried to rally, and now it's, as long as it holds this, as far as we're concerned, it's still in play for a move back into far lower levels, 260, 220s. But you can look across the board. Look at some of these names. I'm not going to do them all, but just to go quickly. Look at Twitter. Off those highs, down 37%. Okay, Facebook, another one which we were, as far as we're concerned, is dead. We wouldn't be surprised if we don't see Facebook hitting those levels again ever, or for a very, very long time. Off that high, down 26, 27%. What else have we got? Facebook, Netflix, Google started to look fairly ugly. It's a really important chart for the market. You see, it's been holding, and look at how we broke. This is one of our favorite shorts, right? We said anything here, as long as it held this, was very nice opportunity since all those other names were breaking, and right here it's just gone knife through butter. So any rally into the beginning of the week that can't hold, we still think we're potentially in line for a much bigger correction. And look at the way Apple traded towards the end of the week when we start to get those China headlines, and we'll get more. Not pretty. Now look at how extended, especially if you look at Apple or Amazon, some of these are. I mean, even for this to just get back and stay in trend, just to move back into the 50, it's still it's an 8% move, 9% move. So again, if these go no bid, if these get ugly, it's going to be very, very hard for the market to catch a bid. And, we really wouldn't want to be stuck on the opposite side. Our favorite short, we called it Elon's gift on the 420. Tesla's not looking pretty. Likely it's not going to stay pretty. We would not be surprised to see this trade back below the 200s very, very quickly. We have some targets in play. Those haven't really changed. So again, the situation on tech in general is not looking pretty, and these things could really accelerate in in a very, very ugly fashion. Now, we talked about SPX. Now, there are a lot of different ways to look at this, and I'm just going to highlight the way we're looking at it. So, we had this, the initial break, the VIX debacle, etc., the beginning of the year. And then we said we wouldn't be surprised, even though we felt we needed to have a decent correction, that we wouldn't be surprised the market stayed choppy in this area for the whole year. Now, clearly we were wrong on that call because we broke higher. Now, how to read this break higher? A lot of people are going to be looking at this as, well, this is all support, and we're going to get some kind of a false attempt to break lower, and we're going to continue to rally higher. Whether that's to fail from here or grind higher, it's going to hold this break, and this is just a little shakeout. This is very, very bullish. The way we're looking at this kind of action, especially with the close back inside of the range, we're still focused on this is what's important for us. And what's important for us, regardless of the fact that, again, we've had all these days with lower lows and lower highs. It's very rare, actually, this kind of pattern. It's, so a lot of people are going to say it's very ominous. It could mean something very, very scary or ugly. We just prefer to look at, rather than patterns, we prefer to look at the levels. And here, the way we look at it, the fact that we tried to break outside, failed to hold the break and close back inside, we would expect to see, even if we're going to resolve higher, minimum a move back into the 50. Now, if that comes in line with negative tariff talks, etc., then we would not be surprised to see all these come back into the 200 very quickly, and possibly, if there's a no bid, low liquidity environment, things to get extremely ugly extremely quickly. But we think that a move back into the 50 at the very least, if not back into the 2800s, is just would just be a very small and healthy correction. So our base case is still that there's that Nasdaq has topped, and we would not be surprised if the ES has topped. But if one of the indices were going to try and pull another rip higher, we suspect that the ES or SPX is the one that's most likely to do so. But again, it's going to be very dependent on the news flow. It's very tricky markets to trade here because the liquidity is shockingly low. Market structure has really changed, and it's all headline driven. So again, we're discussing that with somebody this weekend. I feel a lot of people are not talking about this, but the underlying structure of the market has changed. Liquidity, all these things really mean that we tend to, how should I put this, expect all the technical patterns to kind of be slightly lower odds in this kind of market, and don't rely on them as much as we normally would. But things will surely come back and whack. The other thing which is really interesting, so there's really two parts of the puzzle. So one is equities, and the other one is DXY. So what's happening on DXY? At the risk of being boring, because I've seen a lot of people getting very excited on the moves down, very excited on the moves up. As far as we're concerned, nothing much has happened. So our base case is still that it's trying to put in some kind of a top, and we're going to correct lower. Now, why is that? Is that because we have a bias? Not really. That's simply because the way we look at the chart here is we're going off what happened last month, right? So we came in here, the market tried to sell ahead of this 50 back. It couldn't get traction with the sellers. It broke higher, and then it got smacked down again, and it closed. So for us, the most important piece of information here is this smackdown, this wick here. Okay. Now, what happened last week? Much to do about nothing, because we're still inside previous month range, and the month has just started. So nothing much has happened in terms of the bigger term outlook. For us to get bullish of the dollar, we need to get a monthly close back above this level. If not, this is still looking heavy. Now, looking at it on the weekly, what's happening on the weekly? Well, look at it here. We've got the 100 and the 200 week DMA, and we got the 50, WMA, and we got the 50 here. So as far as we're concerned, as long as we're closing below the 100 and the 200, chances are it's going to come back and tag the 50. Now, if it closes back above the 100 and the 200, our base case will have to change, and we'll have to expect that it's going to try and take out these highs. So essentially, the closes here are going to be pivotal either for a retest of those highs, monthly highs, where we got the smackdown from, or closes below is going to mean that our bigger term outlook for a move back into the 50, back into the 9260s is still in place. So nothing much has changed. And if you look at it as we had at the beginning on the daily, well, right, it's not a lot, and it's still holding below this area. This is still false break. So we just have to be patient here. Now, what are the most interesting things to keep an eye out for on the USD? Well, one thing, just because of the nature of the headlines and the China tariffs, you have to keep an eye on USD CNH, right? Is this going to try and take a rip and break back above the 7 simply on the tariffs, etc.? We'll have to wait and see, but this is a chart that has to be on your radar. USD JPY, if equities turn lower and we get a little bit of a risk off event, our play is still this, and again, you see how it's tying in with the DXY, is this failure here that indicates that if everything goes according to plan with more risk off, etc., this could be the move we're looking for. And as long as we don't regain this 200 week, our base case is still going to be choppy to heavy. Another very interesting one is going to be on all these NAFTA headlines is USD CAD, right? What's happening on USD CAD? Well, essentially, the big question here is this a false break? Or are we going to rip to take out these huge high levels? So I think it's all down to the NAFTA headline, because if you look at fundamentals, if you look at the BOC, etc., normally this should be trading a little bit lower. You'd expect this to be sold. So the thinking here is that it's just holding there because of the negative NAFTA headlines. But if they announce something, do not be surprised to see this test the breakdown, this descending trend line very, very quickly. And if it gets traction to the downside, then this could get very ugly. So I think here there's very little edge buying this, and there's very little edge trying to be aggressively short. It probably makes sense to be nimble or have some kind of slight short exposure, but be ready in case you get a positive NAFTA headline, because the quick pips are likely to the downside on a positive NAFTA headline. And the other thing I'd be keeping an eye out for is Kiwi. It looked like it was doing a really, really good job of trying to base here, and it wanted to shoot back higher, but it just got smacked down on all those negative headlines at the end of the week. So early in the week, one of the things we're going to be most focused on is, are we going to hold the break lower or not? If we hold the break lower, this is likely going to stay heavy, but we're clearly not going to be selling this into the hole. But should this start to get a little bit of traction back above here, very skewed COT report, a lot of covering has to take place. Probably there's going to be some interesting opportunities to try and play this to the upside, only if it can stabilize back below this breakdown zone. Now, in terms of euro, not much has changed. We're at the very, very familiar 1550 mark. Our base case hasn't changed. As long as we can hold this, then the potential is for a squeeze higher. If we break down, then those lows will likely get tested. It's exactly the same chart as the DXY, just flip it around. And you can look at it on the weekly or on the monthly. It's exactly the same as the DXY. But it's an extremely interesting level, because that low, right, if we clip that low, then this could really try to accelerate lower. We still think that ultimately this will try and hold, and this is the path of least resistance. but you have to be open to both scenarios and be very, very careful to see what happens this week. On headlines, on tariff talks, we've got the ECB. Again, it really wouldn't surprise us if Draghi does try to squeeze in a rate hike before he leaves, just for the legacy kind of part of it. So we'll have to wait and see. In any case, extremely interesting week. The overriding theme for us remains there's extreme complacency in the equity markets, and even though these can continue to grind higher, you really have to pay attention to what's happening in tech land and go through those tech charts. There are an awful lot of charts that are down 20 to 30% year to date in an ugly manner. So you have to pay attention to that. Wishing everybody an awesome week ahead. Thank you for liking. Thank you for sharing. Hit me up on Twitter if you want me to post any chart. Take care, guys. Bye-bye.